Oh my God, it's the end of the world. So the media tells me. This is a chart of the British pound as measured by the Philadelphia British Pound Index, which is a basket of currencies that they're weighing the pound against. And after the Brexit vote, everybody thought that they were going to vote to remain. So the bets were that the pound was going to go up. And then when they voted to leave, the pound took this big, huge hit. And the media is crying Armageddon. Now, let's remember, most currencies on the planet, they've all been competing to devalue their currencies to make their exports more competitive. So one of the things that this will do is make imports a little bit more expensive, but exports much more competitive, meaning a greater likelihood of a positive balance of trade for Great Britain, meaning they're going to sell more goods to other people, bringing currency and wealth into their country. So this end of the world stuff, most of it is just a bunch of hooey. Here is the Philadelphia index, the euro. And the euro also taking a big hit. There's a gap down there, and then it rose. But you got to look at all of this stuff in context. Here's the euro going back to 1996. And what you see here is that move was just this little tiny wiggle. Here's the British pound going back that far. And yeah, this looks pretty bad. Remember, this is an index made up of several currencies. The one key feature here is that it broke a support zone that has been holding for quite a while, but that was an intraday move and then came back up and closed. This little line here that crosses it is the end of day close. So it closed above that support, which is, I guess, good news. But most countries have been wanting their currencies to be weaker so that they can sell more goods to other people. Well, here, Great Britain left the EU, and if this holds, which I doubt, I think this is a big overreaction. And what's going to happen is things will stabilize. There will be a slightly different trend. But, leaving the EU, this isn't something that happened when they voted to leave. Now there's a negotiated period of how this is all going to happen. And from what I've read, this will happen over a period of a couple of years. And then here we go. Oh, my God, the Dow. Look at that plunge. The world is ending. But wait a minute. It's still above its 200-day moving average. And doesn't it always have to go back and revisit its 200-day moving average, like you can see back here in February of 2015? And there were plenty of times when it was below the 200-day moving average. In fact, if you look at this alignment of the moving averages, you've got a 50-day moving average that's way up above the 200-day moving average, which is a very bullish sign, actually. That's positive as far as the trend indicators go. If you look back, though, look at this bearish crossover here back in August of 2015, and then look at these plunges. So this was already happening as there was bad bearish news in the market, but look at these plunges here. They make this one look a little bit, it's not that big compared to, bam, 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 bam. This is quite a plunge that we took last year in 2015. But what really gets me here is the way the media is trying to manipulate everybody and instill fear in everybody. They're saying that the exit of Great Britain from the EU increases global security concerns, that now anybody that voted for Britain to leave the European Union, if any terrorism happens, it's going to be your fault. Well, guess what? The inverse of that is that if any terrorism did happen during the period where Great Britain was part of the EU, then it was the EU's fault, or the people that voted to join the EU. So this fear-mongering that the media is doing currently is absolutely ridiculous. And you do have to remember that the media is run by some very big and powerful people, and they tend to be on the side of the other big and powerful people. And it was the big, powerful people, the people that are running things, that wanted to remain in the EU. There's a benefit to them personally for being in the EU. But let's take a look at the exchange rate between the euro and the British pound. And wow, this thing took a big hit right after the Brexit vote. But, let's take a look at it instead of 1 week. Let's look at a month, and then a year, and then 2 years, and then 5 years, and then 10 years. And, this really doesn't look all that bad. I mean, it hasn't broken any support. Yeah, it took a big one-day hit, but, look at the crisis of 2008. This was a much, much bigger move. This is a little thing comparable to moves that it made back in 2015. So I don't get the big deal here. And then regarding the stock market, here's a chart that I've shown many, many times where I take the U.S. monetary base. So this is on the Federal Reserve's website, and the lower line here is base currency. It's the number of paper dollars that exist or digits that the commercial banks have in their checking accounts at the Federal Reserve, where their reserves are, all redeemable in paper dollars. So this is a measurement of the paper dollars that exist, and there were about 800 and some billion just before the crisis in '08. And then Ben Bernanke did this enormous meddling with the economy and pumped it all the way up to over $4 trillion. So he added almost $3.2 trillion to the base currency supply, an enormous amount of base currency supply. And people said, well, it was going to cause hyperinflation. And you really have to understand velocity of currency. During this whole time when he was increasing it, I said there was going to be deflation. And we have had the forces of inflation and deflation battling against each other. And in the retail sector, there hasn't been all that much inflation. There has been more inflation than they tell us there has been. But they're still trying to target this 2%, and it used to be 3%. Somehow, magically, the magic number is now 2% annual inflation. For decades and decades and decades, they were saying the target was 3%. But what has happened here is what you see, this correlation, this red line. I've shown this chart before. This is the value of the stock market. This is the Wilshire 5000 total full cap. So this is the market cap, total market full cap. So this is the value of the 5,000 largest companies in America. And when you take those 5,000 largest companies, it's probably well over 95%, more like 98% of the value of all the stocks that are listed on the exchanges. So this is a picture of the value of the stock market. And what you see here is this amazing correlation. And like I've said many times before, there is absolutely no possibility that this is a coincidence, that the stock market's levitated right along with the creation of base currency. And so that means that the inflation that they created inflated the stock market. There was inflation. There's just inflation in an asset that is not incorporated in the consumer price index, which is what they call inflation. I look at everything in society to try and see where currency flows are going. And obviously here, the currency they created went toward reflating the stock market. But what I want to point out here is that several times in the past, Janet Yellen took over in February of 2014. So she took over right about here, and the tapering happened, and the blue line, they stopped inflating base currency at the end of 2014. So all through 2015 and 16, they haven't added any more base currency to it. It's actually starting to shrink. But when you take a look at what happened with the stock market, it fell back down to match base currency and then rose again and then crashed to exactly match base currency. Well, so it's doing a pullback now. Guess where it's probably destined to go? It's probably going to go back to match base currency again. And this is something that I have been predicting. I still think we've got a pretty good resistance area going on now up here. I think the stock market has put in its top. I could be wrong. The stock markets could rally. But one other thing that I want to point out here that I've pointed out many, many times is if we take this chart and go way, way back here, This chart goes all the way back to 1918. These gray bars are recessions. This big thick one is the Great Depression. And what you see is that without exception, we have a recession every 2 to 9, actually every 1 to 9 years, because there was a period in here and back in here where we had an economic expansion that was a year or less. But if you look at this, the economic expansion that we're in right now is about the same as the economic expansion that was happening in the 80s, and it's a little bit shorter than the one from in the 90s and back in the 60s. This one lasted just under 10 years. This one's about a 9-year expansion, and we're already about 8 years into this economic expansion. So we're surpassing right now the third longest economic expansion in history. Pretty soon we will pass the second longest expansion in history. And the probability of this economic expansion continuing on without a recession becomes lower and lower and lower with every week that goes past. And we are probably due for a recession. And as I've said in the past, all of this currency, this economic meddling that Ben Bernanke did, will be released, and it will be released in the opposite direction. It's going to be a very painful adjustment when the free market tries to account for this economic meddling that a single human being was able to accomplish. And so looking at these moves in the markets, in the currencies, and the fear-mongering that is going on by the press, they're trying to make a big deal over this so that there will be enough signatures to have another referendum in Europe. They're trying to keep the EU together. Personally, I hope it goes away. What will happen to the prosperity of Great Britain? Well, as I said, with this fall in the euro, their exports become more competitive, and they're going to have less regulation on top of it. So that means they're probably going to be building the same stuff, and they're going to be selling the same stuff to the same people. However, that stuff is going to cost less. They're going to get to build more of that stuff. So I am pretty sure that leaving the European Union is going to bring them greater prosperity than they would have had. However, the world is probably going to experience an economic downturn. The media and the European Union are going to blame any negative things that happen in Great Britain on the people that vote to exit the EU. But that's just not the reality of it. What the reality is that everything happens in waves and cycles. There's going to be some bad stuff. There's going to be some good stuff. And it's all probably going to be a little bit better now that Great Britain has voted to leave the EU. Thank you very much for listening. If you got anything from this video, please like it and share it. We'll see you next time. This video was brought to you by goldsilver.com. I'm proud to say we've been one of the most trusted dealers for over a decade now. We have fast, free shipping and a price match guarantee. While our competitors serve you ads, we serve you education. And that's the difference with goldsilver.com. To learn more, click the info button. Thanks.